Good morning, traders. Well, morning to Aussie people. It's afternoon in probably New York and about close to night in London. Today is 14th of September. It's a quarter to 6 a.m. in Melbourne, Australia. If you have watched my previous videos, I said that yesterday, I said that tomorrow is going to be a kind of a break for some of these currency pairs that had a radical move from the beginning of this week. And it's going to be very good for oil and silver and gold. As you can see, this is oil. I opened this position yesterday as I was recording this video. If you haven't watched it, go back and watch the other one. It's very, very informative and educational video. I talked about a lot of things. I opened this position yesterday and I put my stop loss under this pin bar a little bit lower, and now today market moved, let me see, about 110 pips. So I moved my stop loss to break even a little bit higher and keep it there. So see what's gonna happen. So this is the Fibonacci of this pin bar, and that's the target that I have. Actually, this move is done, so I have to exit here. But we have a little bit of resistance here, and we expect that the market's gonna go higher. So I move my stop loss actually a little bit higher to lock in some small profits. But yeah, let me draw another Fibo to show you what's going on now. What is retracement? This is a move that we have. This is the bottom of the market. That's the current top. And let me move this one. Let me delete it. Draw it again. You see the market from here about 45.5 moved up to 49.4. Okay, and then retraced back. The retracement came back to 61.8. Well, the line is on this resistance line, so you cannot see the Fibo line. That's the white line. That's the 50%, and the other one, as you can see here, is 61.8%. So the analysis of this retracement is that, as far as I've seen in the market, and I've tested this analysis, and it's about 80-90% true. So that when the market goes up and comes back, when this retracement comes back to 61.8%, normally it goes above. When it starts to move again, it goes about to 161.8%. So 101. See this line? Actually, to show you, I have to draw it in the reverse. You know, if I draw it like this. You see the market came back. This is 161.8%. So that's the target that we're looking at. And as you can see, this is the top of the market. This is the event area we have here. Let me zoom in, zoom out. See, yeah. If I draw a resistance line around that area, you can see we have a resistance there, and another one here, and another one here. So it's a kind of a strong resistance. So that's the target that we're looking at the moment. So the market came back to 50% and then 38%. This is the reverse Fibonacci, okay? So I'm gonna just decide where the target is. The target is 161.8, and I put my target a little bit lower than that. So the market, give it a little bit of a room. And I move my stop loss step by step every day. I come back and check if the market has moved higher. We have a small resistance here as well, so maybe tomorrow market's gonna stop here, maybe just break through and just shuts up. But this is how you draw Fibonacci to get the targets. If the market retraces back to 50% and 38.2%, normally it goes back. If it starts to move back again, it goes up to 161.8%. And I've seen some moves going higher, even up to 261. But this is a very, very strong, very long-term move now for oil. So 161.8 is my target. Let's see what happens during the couple of days remaining of this week and the next week. So this target is about, we're looking at it about 10 days. Okay, my position is gonna be open up to probably end of next week, maybe, if the market fluctuates like this. So that's how I draw it. But normally, you have to draw it in reverse. Let me keep this just to remember what happened and why we took this position. I keep this Fibonacci here, and yeah, just let's see what happens. Okay, let's go to gold. If you remember, we drew this Fibonacci about 4 days ago, and the gold is dropping. Today was a very sharp move again, about 130 pips. So it's about 13.21 at the moment, and it's getting close to 261.8 fibo level. If you have set your target according to what I say to this Fibonacci, you must have a target halfway here, close to 261, maybe 1/3 of this distance between 261 to 423. Okay, yeah, that's what I'm gonna say from now on. So 1/3 or 1/4, maybe 13.12 was your target, should be your target if you trade according to Fibonacci. So market is about 85-86 pips at the moment left to your target. So you should be in a very good position, and you should be in about 240-50 pips profit if you open this position according to my strategy. Silver is the same, dropped last night, well, today, and it has a little bit of fluctuation around this area. This 1774 resistance line is acting as a very strong support because it has some event areas before, and it's a very strong support line at the moment. That's why it just is holding on. So at the moment, let me draw these lines. This is a target line that we're looking at. It's dark blue. Let me change it to yellow so you can see it very clearly. This is the line that we're looking at. This is a channel that silver is moving. It touched the top of the channel and it's going back. Maybe it retraces back to the bottom, and if we see any signal around here like this pin bar or this formation, this candle, this 3 candle formation, this is a buy signal for us, and it's gonna touch this 21 moving average as well. It's a dynamic support and resistance. So as it gets close here, we just have a sharp eye to get any signal around this area. Check your indicators as well. Stochastic and MACD are the most important indicators that we use after moving average. Okay, just take a look at them as well. This is gold against Australian dollar. It's more fluctuating. We had this doji bar here. Doji is a kind of a signal that the market is deciding which way it's gonna go. So it had a bit of a gap, a small gap, 10 pips, and it filled up that gap. I don't follow the gap strategy, but if you do, maybe you would have a small profit here. GBPUSD, if you remember, I drew these rectangles here as a kind of event areas, support and resistance zones. I had this one on top, and I said that if the market goes through this, it's gonna have a kind of a resistance and it's gonna rest. As you can see from 5-6 days ago, 7 days ago, the market moved about 370-80 pips. It's a very sharp move. It's just like a runner. When a runner sprints and runs very fast for a short period of time, he must rest. That's the kind of a thing that we see here. When the market moves very fast, it's gonna rest. So its market actually at the moment is resting, and it's taking its breath. Maybe it goes back up to this area even, kind of retraces. This is an event area. It's a very strong support resistance area, and the market couldn't break through it. It just picked through it and then moved back again. So EURCAD, the same, still fluctuating. We have these big inside bars, and when the market does this kind of up down, it's kind of a spring that is just getting pressurized, and then it's gonna release its power. So it's a very strong event area here. It's a very strong support area, as you can see around this area and this one as well. So either the market's gonna break through it and it's gonna drop sharply, or it's gonna go back and let a bit fluctuation like here that we have the same move. This was a very beautiful trade for us. I had a very small trade in this one, and the market moved back sharply here and took my stop loss, and I got out with a small profit. But if you still are in this position, probably you should get out. This move is done. It's moved way beyond to 423 Fibonacci level, and it's done. GBPCHF, again the same. 2 radical days, very strong moves during past 2 days, and today just gonna rest. It touched the 423 and it's done. We drew this Fibonacci about 2-3 weeks ago, and we said that our target was around this area. As I said, 1/3 of this distance between 261 to 423. So you should be out by yesterday, but yeah, still very strong move, and it's gonna rest at the moment. Nothing in this pair. If you have you still have your position, probably it's the best time to get out. It's enough. Okay, Euro GBP. Again, I drew this arrow, if you remember, about 2 weeks ago, and this Fibonacci the same day, and I said that the market's gonna go around to this, close to this rectangle here. This is an event area, and as you can see, almost touched this rectangle. But you should be out around that area, so you wouldn't be in this position. But if you are still in this position, my advice is just close this position, get out. It's a very nice profit, fantastic trade, and just keep your money and look at the search for another position. CAD JPY, again the same. After breaking this resistance line here, it broke through and it moved very sharply. You should be out by now. Your target should be above this 261, around this area, and you should be out today. It's a very nice profit, about 280-90 pips. AUDJPY, again, I had a position yesterday and it moved very good. It touched the 261, and I'm gonna close my stop loss a little bit. Maybe I even go to break even, just above the entry level. So I keep it there. The market broke this resistance line here, kind of a ceiling we have here, and hopefully it's gonna move higher. My target is above there, as you can see, above 261.8 and under this major resistance line there. So I follow this trade step by step, and I move my stop loss 1 day at a time. AUDUSD, again the same. I had a sell position 2 days ago around that area, that after that candle, and it's 2 days that market's going down, and I'm gonna move my stop loss to break even, and I'm out. Literally, you cannot lose this trade anymore. Okay, even the market goes back, you're gonna break even. Don't lose any money. That's the first rule of success. Do not lose your money. Then we can think of profits and getting more money back. So lock in some small profit, lock in your trade, and then let it run. That's what I do. I'm a trend follower. GBPJPY, again, fantastic move. As you can see, this arrow here, I had a buy position here. That was the best signal. It could be one of my best trade, but the market moved back, and after 80 pips stop loss, I got out and I lost. This is a kind of the worst situation for a trader. A winning trade, but you lose. That's the worst situation. But the problem was that I was late. As you can see, I learned a lot from this trade. You know, this is not a losing trade for me. This is a very beautiful experience. I have to be in around this area, and if I was in this area after this pin bar formed, I would put my stop loss under this pin bar, and no way I would be in still. There was no way that I was it's gonna hit my stop loss because the market didn't move that much back. The problem is that I got out because I went in very late, you know, and because my position was very high, my stop loss was not that far. I put it under the open of this candle, but it was not good. I had to put it under the actual move, under the bottom of this move. That's why you have the position calculation should be that your target and your stop loss should match your position. So first decide where your stop loss gonna be, then you have to calculate how much position you can open. That's what I did, but my stop loss was not that far enough. So I was late. I learned a lot from this trade. I have to check now every day to get a very sharp signal, and I'm not gonna be late from now on. So anyway, I lost this trade. Euro USD is moving back. Again, it touched the 261 now. We're almost out. Maybe your target's would be around this area, 1/3 of distance, and maybe tomorrow, I don't know, you're gonna be out. But this is a 21 dynamic resistance, right? It's a moving average. It touched the moving average, and it's under this. This is a resistance line around resistance zone. Let me draw again this my beautiful rectangle. What we see here is this zone, and let me change the color to another color so you can see it properly. Oh no, this is the line. Yep. Now if I change it to this one, maybe, yep, that's better. Okay, market is fluctuating in this area at the moment. This is the resistance line there, and under these two actually is a zone, and it's inside this zone. Maybe it moves back because of this moving average and this resistance area. Maybe just break through and goes to 423, we don't know. But if you have a trade, just move your stop loss, lock in some trade, some profit, and then yeah, let it run. It's a very beautiful trade. USDCHF, that's fantastic. For 3 days we have like something like 200 pips move. Very amazing. I don't have any trade in this, and probably you should lock in some trade. I don't have any signal around this area. This is not a signal for me. Maybe after this big candle some of you have some trades, and you should be about 100 pips in profit. The last one that we look at is Euro AUD. Still is fluctuating. Still this is a small resistance line that I drew, support line that I drew about 2 weeks ago, still holding on. And as I said, this is a higher lows, and it shows that the market's gonna move higher. But as you can see, the market is kind of shrinking. It's a spring. See that? It's getting smaller and smaller, the candles, and it shows that the pressure is just is getting more and more, and it's gonna break. When it just ruptures, it's gonna like shut up, or it's gonna drop very fast. So we have an eye on this. Anytime that you can put a pending order even on the bottom of this, or maybe on top of there. So any way that the market moves, you're gonna be in. But yeah, this is still no move in this pair. So take a look at the, what is this, Euro AUD, and then do your own analysis. That's what today. And yeah, have a nice time. Please subscribe to my channel if you like my videos, and yeah, stay tuned. It's a very beautiful week, and next week's gonna be very beautiful as well. Thanks so much for watching. Have a nice week.